So what I thought we would do, we're going to take a look at some of the rippling effects that I see on a daily basis. And again, this is especially for those who have at least $250,000 or more in pre-tax monies. Now, why am I focusing on these larger amount of accounts? Well, quite frankly, some of you contact us and you might have $60,000, $70,000 in a 401k IRA, which is fine, but generally you're not going to have any tax issues with that. That's because in the tax world, the more you make or the more you have, the more the government's going to try to take. So this information I'm sharing with you is really geared towards those of you, again, who have $250,000 or more in pre-tax retirement accounts. So let's kind of take a look at some of the strategies Tony Walker can help with. But first, what are the issues at hand? The first thing we'll talk about, and actually I'm going to go over this in a whiteboard segment following this particular segment. It's really interesting, but it's the taxation of Social Security. Now, as you're going to see in the next segment, in many cases, Social Security is not even taxed. That's right. Depending on other income, potentially you would pay zero taxes on your Social Security. And as we're going to see in a minute, the big beautiful bill, while it helps some people, a lot of people, because of the pre-tax tax tumor that has to eventually hit your tax return, is going to cause problems on your Social Security and actually increase taxes on it. So that's a huge rippling effect. Another rippling effect of yanking money out of these tax-infested plans is increase in Medicare premiums, something known as IRMA. In fact, Aaron, put this up full screen. I want you to look at this. Notice, again, we're back to the same theme. The more you make, the more they take. Now, the way they're going to take more money from you in this case is if you make more and more money, your Medicare Part B premiums go up, and they can go up significantly. And this is a huge issue for people who have large 401ks or IRAs. And what they end up doing, we'll talk about this in a minute, is they put off the pain and they act like the tumor's not going to grow and the problems are going to go away, which it actually gets worse if you do nothing. Next, tax bracket creep. Again, let's put this up full screen, Aaron. My gosh, folks, you don't understand something. There's two problems. Number one, we don't know what these taxes are going to go to in the future. Right now, most of them are very, very low, comparatively speaking. But even if you start out in a lower bracket, let's say you're in the 12% bracket. When you start taking out large distributions from a pre-tax account, every bit of it is taxable. It goes on your tax return and it can cause what I call tax bracket creep. In other words, that money can throw you into higher brackets, and we can show you strategies to try to keep you from creeping into these high tax brackets. Next, this is a huge issue. With over 3,500 clients, many of our clients are retired. We have a lot of people pass away, quite frankly. We had 67 death claims that we had to take care of in 2025. So what happens is, here's how this kind of plays out. Our clients have large and significant IRAs, okay? They pass away. In many cases, I meet their adult children for the first time. That's right. Generally, they come in to meet with me or one of the other fiduciaries. We help explain what their parents had. And if they're IRAs, we have to share the bad news with them. Guess what the bad news is? The tax tumor didn't die with their parents. The tax tumor gets passed off to them. And with the new laws, unfortunately, the government is forcing these adult children to take out that money within a 10-year period of time following their parents' death. What's the problem with that? Well, let's say somebody out there is still working, making good income. They'll look at me sometimes and go, Tony, I don't need this money nor want it. The problem is they have to take it. So, moral of the story, folks, when you die, unlike the tumors that we might have in our bodies die with us, this tax tumor does not. It gets passed to your kids. So my thoughts are, why wouldn't you want to address it now? Let us help set up a strategy to try to minimize these taxes to your children upon your death. Finally, now this is a hard one to explain to people. Years ago, I studied what's called lost opportunity cost. Most advisors, even the financial world, really doesn't understand opportunity cost. Opportunity cost means when you put off getting something now, there's actually a cost. And I'm going to create another another whiteboard to go over this. In fact, I might even talk about it in the radio show. This is really interesting. What we're taught to do is save for the future, which we should. The problem is with the passage of time, with all the fees you're going to have to pay those 401k managers to manage your 401k, with the loss of use of the money. In other words, if you're socking money away and maxing out a 401k, you may not have any money left over, so maybe you have to go out and borrow money to buy a house. Well, that's interest that's on the loan that you could have had you not invested in the 401k. Now, again, we're not telling you not to do the 401k. I'm just saying, folks, with the passage of time, when you put money away somewhere and you have no access to it or use, you're generally creating other costs somewhere, which is called lost opportunity cost. So there's a lot of rippling effects that go into this, and my concern is that many of you, because there's so many people out there offering, quote, retirement planning services, many of you are rushing into financial decisions, and what's happening is these so-called financial experts are leading with financial products. That's not how you do retirement planning, folks. The first thing you have to do is come up with a plan, a game plan. You should not rush out and buy any financial products without that game plan. And an advisor is not going to give you a written game plan laying out exactly how this is going to play out. I would certainly get a second opinion.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.